If you buy one ETF this year, just make it this one. Investors, yes, ETFs are taking over Wall Street with over 12,000 ETFs listed globally. Yes, over 12,000 ETFs listed globally for investors to choose from in the stock market. Investing is already so complicated, confusing, stressful, and with over 12,000 ETFs to choose from, it can be so confusing for investors in the stock market, especially when they start off their own investing journey for themselves right now, this year, and even in the future as well. But on the bright side, there's only a handful, yes, a handful of investing strategies for ETFs that can make you a successful investor in the long run to hopefully retire with so much money in the stock market, especially in your own ETF portfolio. These strategies involve things like great returns, passive income from dividends, as well as the ability to even beat the stock market or the S&P 500 long-term to retire with so much money in your own ETF portfolio and retire hopefully a multi-millionaire in the stock market. You might be wondering, well, Marcos, what are those ETF investing strategies? Great question, because there are 5 different ETF investing strategies that I think are great in the stock market for beginners who are investing in ETFs right now. The first strategy is broad market investing. The second is going to be growth investing. Next up, we have a dividend growth investor, a covered call ETF investor for monthly income, and then as well as we finally have the ultra high income yield investor as well. So in this video, I'm going to go over 5 of the best ETFs to invest in the stock market for these 5 different strategies. Now I'm going to pick only one ETF for each ETF category or each strategy for you to invest in the stock market, as well as one honorable mention ETF for each category in this video. Now, I believe that these are going to be some of the best ETFs in the stock market for each strategy because everybody has different goals, preferences, what they want to invest in the stock market. They want dividends, they want growth, they want diversification, they want ultra high income. So all of these strategies are all in this video for you guys to invest in the stock market to hopefully make so much money, profit, dividends, and so much more to retire with, of course, so much money, hopefully long term. So without further ado, let's get started. First up, we have the best ETF for the broad market category for investors who want diversification and the best strategy for broad market investing. My favorite ETF for this category is VOO or VOO, Vanguard's S&P 500 ETF, where I myself have over $100,000 invested in this ETF. Yes, over 100K invested in VOO for myself right now. If I didn't invest in VOO and had to choose another broad market ETF, I would definitely go with Vanguard's Total World ETF VT for more diversification than only US stocks, with international stocks for complete diversification in one ETF like VT. VOO or VOO is obviously my favorite ETF in the stock market because I have so much money invested in it, but also because it is the most liquid ETF. That is an S&P 500 ETF, and of course that has 500 of the largest companies, so you have high quality stocks, diversification, low fees, a solid dividend yield, everything in this one ETF, legit the whole 9 yards. VOO invests in legit every sector of the stock market for ultimate diversification, with its top sectors being technology followed by financials, healthcare, consumer discretionary, and communication services. This ETF holds, you guessed it, 500 different stocks. You invest in some of the top names in the stock market like Apple, Nvidia, Microsoft, Amazon, Meta, and Google. The dividend yield is around 1.3%, which is pretty solid, and it also has a low expense ratio of just 0.03% as well. The returns from VOO have been absolutely amazing for investors, of over 15% returns annually over the last 5 years, and even over 12% annually over the last decade, so some solid amazing returns, and of course diversification, all in this one ETF for you and your ETF portfolio. The second category is growth investing, and my favorite ETF for this category is Charles Schwab's US Large Cap Growth ETF, SCHG, where SCHG is yet again another ETF that I own in my portfolio, and I love this ETF so much because of course I invest in it in my own ETF portfolio. Now, if you want to see my entire ETF portfolio, you can see it for free, yes, free with Blossom on the Blossom app. On Blossom, you'll see my whole entire ETF portfolio and exactly whenever I buy ETFs, where I think invest like $6,000 every single month in ETFs in my Roth IRA, my 401k, and my taxable brokerage account. It's all there for free on Blossom, so go ahead and download Blossom using the link in the description of this video or in the pinned comment section, and I will see you all there on Blossom. Now, if I didn't invest in SCHG and had to choose another growth ETF instead of SCHG, I would definitely go with Invesco's S&P 500 Momentum ETF, SPMO. Charles Schwab's SCHG is legit one of my favorite ETFs because it's a pure growth ETF where you invest in legit high quality growth stocks to hopefully outperform the stock market and to get the best return possible in your ETF portfolio from these high flying growth stocks. And this ETF has also crushed the likes of the S&P 500 index, which is a very hard task for any ETF in today's day and age. Please remember that any ETF that involves growth stocks or technology stocks will be a very aggressive strategy, so if you have a higher risk tolerance, a longer time horizon, and hopefully you don't care about dividends too much, then this ETF is definitely going to be one for you. This ETF of SCHG invests in exactly 229 different companies, where it's mainly invested in the technology sector, followed by communication services, consumer discretionary, healthcare, and financials. Its top holdings are the usual suspects you see in the stock market in every growth or technology ETF like Apple, Microsoft, Nvidia, Amazon, Meta, and Broadcom. The dividend yield is low, but that's completely normal for a ETF of this caliber in this category of around 0.4%, and also has a super low expense ratio as well of just 0.04% as well. Lastly, the performance of SCHG has been amazing to investors for quite a while now, providing over 17% returns annually over the last 5 years, and even over 15% returns annually over the last 10 years, making this a very strong ETF for investors in the stock market to get rich hopefully the fastest way possible, but with the less risk possible in the stock market and their investing goals and needs. Our third category is a dividend growth investing category, and my favorite ETF for this category is actually iShares Core Dividend Growth ETF, DGRO. And fun fact is I actually own this ETF in my portfolio in my Roth IRA for tax-free dividends by the time I retire to hopefully snowball those dividends and get some solid capital gains in my portfolio in my Roth IRA. Of course, SCHD is going to be my top honorable mention, but hey, I've been giving SCHD a ton of love lately, so I'm going to give DGRO the spotlight right now in this video for investors in the stock market who want dividend growth in their portfolio. Don't get me wrong, I love DGRO just as much as I like SCHD because they're both great funds for dividend growth investing in the stock market. DGRO in its name is a core dividend growth ETF, so it's going to grow its dividends hopefully year over time to hopefully beat inflation, have you live off dividends, and snowball those dividends and compound those dividends to have so much money in the stock market 10 years, 20 years, 30 years, 40 years from now with so much dividends in your portfolio in a reliable, safe, and sustainable manner, which is honestly the best way to invest for dividend growth investing. The top sectors in this ETF is mainly financials and technology, followed by healthcare, industrials, and consumer staples as well. DGRO's top stocks out of its 408 different holdings is going to be more than SCHD, being high-quality dividend growth stocks like Microsoft, JP Morgan Chase, Broadcom, ExxonMobil, Johnson & Johnson, and even Apple in their portfolio, which is pretty solid. Because DGRO has also had a great historical performance, returning over 16% returns annually over the last 5 years, and even over 11% annually over the last decade, and of course, dividend growth as well has been super strong year over year to grow those dividends, snowball those dividends even faster than if you were to invest in other ETFs with lower dividend growth rates like other funds. But yes, DGRO is a great ETF for dividend growth investing. DGRO has a starting dividend yield of around 2.2%, and the expense ratio is still going to be super low at exactly 0.08%. The fourth ETF category are those covered call ETF investors who want double-digit yields, but also some solid upside appreciation as well, the best of both worlds. And my favorite ETF is going to be Neos Investments Nasdaq 100 High Income ETF, QQQI, where this ETF won the award by ETF.com for the best active ETF this year, so this ETF is definitely the real deal. My top honorable mention covered call ETF is a sleeper pick, super underrated, a sleeper choice, and that's going to be Tap Alpha's 0 DTE S&P 500 covered call ETF, T-SPY. Neos Investments is my favorite ETF provider for enhanced income based off of option strategies for covered call ETFs because they have a very experienced management team, tax efficiency, as well as good stable returns monthly for income, and of course upside appreciation, literally the best of all worlds for high income investors, which is a dream outcome if you want high income, solid returns, monthly payments, legit tax efficiency. It's all in this one portfolio of investments by Neos. QQQI invests in legit every single stock from the NASDAQ 100 index. So you basically own the QQQ ETF in a nutshell, every single stock from that portfolio, and Neos will go in and write or sell covered calls or call options on all the stocks in this index to generate you that double-digit, high juicy income that is paid out every single month to you as an investor, which is honestly pretty solid. This fund, of course, invests in the tech-heavy NASDAQ 100 index, so you get, of course, 100 different holdings from top names like Apple, Nvidia, Microsoft, Amazon, and of course, Broadcom. The dividend yield is currently under 14%, where it pays out income to investors on a monthly basis. Yes, monthly income with this ETF, which is honestly a crazy way to think about it. But yes, you get monthly income, and also has a super low expense ratio for this strategy, or I guess a solid expense ratio of 0.68%. Now, if you want to see legit QQQI broken down with a full and complete guide, as well as why these ETF products by Neos is so good, you could check out this video right now to see my whole interview with the co-founder and managing partner of Neos Investments, Troy Cates. Legit, that video is so informational. I had so many questions. You will get a full and complete guide on Neos products as well as QQQI, so go ahead and check out that video right now. Our last category and final category is a very fun one, and that's going to be the ultra high income yield investor. And my favorite ETF is going to be Misty, the Yield Max MSTR Option Income Strategy ETF, where my top honorable mention ETF is going to be ULTY or ULTY, the Yield Max Ultra Option Income Strategy ETF. Misty is a very complex derivative, and it's very complicated to explain this strategy in one or two sentences, but if you want ultra high juicy monthly income and you are very bullish on both the Bitcoin and the leveraged Bitcoin proxy of MSTR or strategy stock, then you will love this ETF because it has the best of all those worlds in one ETF of Misty. Misty Bitsy is a cover call ETF that writes or sells call options on strategy stock, and when you do that, you will generate high juicy monthly income, most likely closer to the strike price instead of out of the money, because you're going to be foregoing any upside potential on strategy stock in exchange for that high juicy monthly income. So if you want monthly income, then this ETF is going to be for you. On the bright side though, if you want a complete ETF breakdown of Misty as well as a price prediction for Misty, I did that for you guys in this video, so go ahead and check out that video right now. The expense ratio is 0.99%, so super high, but you get, of course, that current distribution rate that is well over 100% with some solid income, so that offsets the high expense ratio for this fund. You also get some very volatile income payments where one month it might be super high and the other might be super low. So yes, monthly income, but it's going to be super volatile. Of course, volatility plays a huge portion in the income from Misty, so more volatility equals higher income, and of course, the higher yield you have, the more risk you'll be taking on, so know that this product is super risky for that ultra higher income investor who wants to take on the most risk for hopefully the most income in their portfolio right now. The results have been legit super insane, crazy, just bonkers, legit over 160% returns last year, and even more since the start of this fund. So it's literally a rocket, and it's going to be a different fund for everybody. It's going to be pretty unusual to see these higher returns, but hey, it could be proving me wrong long term. Now, I know what you guys are going to be thinking. Marcos, if you had to choose just one ETF, what would it be? Of course, VOO, VOO and Chill, S&P 500 and Chill. That's my go-to ETF right now, next year, the next year after that, the next decade, VOO all the way. Now, if you guys like this video, please give it a like because this cute puppy did. Now, if you want to see my interview with Troy Cates, the co-founder and managing partner of Neos, you can check it out right here. And if you want to see a full Misty breakdown, check it out right here. I love you guys so much. Crush in the stock market and take it easy. Peace.